following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad.
Good.
In fact, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother. That's so cool.
Right, yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting.
Yeah.
But as far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate you prowling with us out here.
Now, Tom O'Brien.
Sorry about that, folks. Not sure what it is. Welcome, folks. This is Tom O'Brien. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Yeah, I'm in some kind of a tunnel, but that's all right. Market-wise, let's take a look at it out here. We have the Dow Industrials up 50, NASDAQ up 11, S&P's up 3.5, gold contract up $2.40, traded at $1,234 an ounce. Silver up 7 cents, $17.70 an ounce. Platinum down $8 at $1,006 an ounce. You have copper off 2 pennies, $2.63 a pound. Light sweet crude down 86 cents, traded at $52.15 a barrel. Notes, 10-year note up 5 ticks, trading out at 125.03. 30-year bond up 20 ticks, 152.04. Both notes and bonds, folks, going topside once again with volume. King dollar up 385 ticks, traded at 100.250. King dollar's failing once again, folks. They sell it off each and every counter trend bounce you get. King dollar is in a confirmed ABC structure on the way down. Your price projection is 96.965. Euro, the euro is trading at 106, and the yen is trading out here at 112.21. Our phone number is 877-948. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so your high that the indices are going into today was the high from the 26th, 229.71. We've hit 229.65 in the SPY. Bottom line, we'll see whether it can get up into that level. Or in fact, can it close over 229.55, which was the high that was generated on Monday. Now, Dow Industrials right now, what the Dow has done, the Dow has failed thus far. Dow is going after the high from the 26th, that's 20,125. We made it to 20,155. There we go. It's a beautiful thing. Bottom line is that you went into that higher level yesterday. You had the volume contracting in a huge way as we went into that high. We did 769 yesterday. We'll probably do around the same today. Bottom line is that you're coming into, let me get the exact date here. It looks to me that the Dow's going to fail. That's the 26th. So when we take a look at the 26th, you're dealing with 829 million. Yeah, you're going to have a failure. This is pretty intense, actually. We're at 491. That would be saying that it's going to do like a 340 million in an hour. It's not going to happen. And I don't expect that the Dow is going to get over the high also. Now, the NASDAQ composite, this is the number you want to watch, folks. So the composite out here this morning got up to 56.89. Right now we're at 56.74. 56.69 is the number. That's the number to keep your eye on, because if we close under that, that'd be a failure inside the NASDAQ composite also. The way the futures have traded when it took out the highs this morning, that was one of these spike highs that any trader likes to go after. Excuse me. Oh, sorry, folks. Excuse me. So what happens is that we had the spike high come in at 11 o'clock this morning, 10:30 to 10:45 to 11, and that was it. Bottom line, it spiked up. See if there's any more buy stops. So they hit the buy stops over it. Comes back down just as quick. Your probability is pretty good that when you're looking at the NQs that you can be down at 51.72 coming into the close. And if that's what we have, you're going to have failures, bottom line, in the two largest indices. We go and we take a look at the small caps. What we have with the small caps is this. We take a look at the IWM. IWM is down 61 cents, and you are coming down once again with volume. Bottom line, we went higher yesterday, sideways to higher, sideways to lower rather, but you were pushing into a swing with light volume. You're expanding volume once again. That's saying that the small caps are going to run down to this 133.17 area. Gold contract, they just can't get it down, folks. Bottom line, gold contract out here trading at 12.3420. We hit a low today of 12.29. You have 189,000 contracts. That is good contract volume. Bottom line, this gold contract wants to run up to this 12.70, 13.15 area. Silver, same type of setup in silver. What we have with silver, silver right now is trading at 17.65. You've done 53,000 contracts. Bottom line is that you swing up here of $19.12 a game. Bonds. Now, this is the number here. This is going to be really wild watching this thing shake out. So, right now, the 10-year has done 1.3 million contracts. So, we're probably going to end up doing 1.4 million. You're coming into 1.59 million at a price point of 125.13. We've hit 125.10 today. So, what you're doing, you're coming up to the swing. You have volume right underneath it. Bottom line, this thing looks to me like it's going to more than likely do an ABC structure on the way up. If that's what we get, we have, let's see, 122. You get about 2.5 points, which would get us to 126. And that makes sense because 127.07 is the low of the, that's 126. Yeah, 126. 127 is the low of November 9th. And that's where I suspect we're going to go first. We take a look at the 30-year. The 30-year looks like it's actually going to go right through that. The 30-year out here today, let's go like a 30-year out here is at 152.02. You've done 248,000 contracts. That also is good contract volume. And the low of the 9th is 155.13. You're coming into the swing point that we're talking about in the 30s, 153.31. So it's about 1.5 points away from where we are. If we did the same type of volume out here, this thing would bust it, and I suspect it'd have the juice behind the move. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 42. You get the NASDAQ up 9. S&P's up 2.5. And as we do each and every Tuesday at 20 past the first hour, we get our man, Mr. Basil Chapman. And don't forget, folks, Basil's got a great show right here at TFNN every trading day, 11 to 12 Eastern Standard Time. They can get all that programming from TFNN right on your cell phone. You go to TFNN.com. Hit Tiger TV right on the right-hand side. You're going to get some great HD quality video as well as audio. Basil Chapman, what's going on?
Hi, Tom. How are you?
Good. Big day in Boston today. Big parade. I guess it's snowing too, right? Was it snowing?
It was snowing, yes. Now it's just light rain, but I don't think any of the fans cared about that.
No, that's a fact. There's no doubt about that. No doubt about that.
Yeah, spectacular comeback for sure.
Oh, my God. Unreal. Okay, market-wise, let's take a look at it.
This is going to be really interesting. There are a couple of things within the Chapman wave techniques that we look at. Here I'm showing you the Dow. So there's a pattern that's called an expanding wedge, and today's all-time high at 20,155 was something that we've been anticipating this past week because almost all the indices of importance have gone to peak C's in their weekly charts, and I was anticipating that there's a good chance that we would make leg D today, or at least this week. Well, we made it today. This is still leg D. You can see this is the weekly chart. Now let me show you something very interesting. The stochastic and MACD in the daily already, they've been very weak. They haven't complemented the move to the upside, which means that if the MACD, this is the MACD, the moving average convergence divergence, if it crosses sharply higher, then you can get a whole new series of highs to the upside. That's a big if. And one of the reasons why it's a big if, in the techniques that I've used over the years, the very quick peak A to peak B to peak C, and then a D, a leg D in a weekly chart, usually there's a pullback. It doesn't say it's a major decline, but usually after that D, there's a very quick pullback. So I'm going to be watching this very closely. However, I haven't got all the little ducks sitting in order now because the S&P today should have done it, and it didn't go to that higher high in the daily, and it didn't go to leg D in the weekly. So the S&P this week still has to go to 2,301. It has to go 0.01 higher than 2 weeks ago. Once it does that, Not only is it a leg D, but you can see there's what I call a chap wave inside track. This inside track is what I term a repellent or resistance area. And you can see every time this green line has been hit, the S&P has pulled back. So I must emphasize the monthly charts are still very positive, and even the technicals and the weeklies, but this particular pattern says you got to be somewhat careful. So it's very interesting because I mentioned to you last time that I was interviewed with, we were talking about the DOD, which is the Elements Dogs of the Dow, which we've been long since about 1805. That's around about mid-November. And today went from that 1805 entry point, it hit 2160. And you see the way the MACD is really extended?
Yes.
See, the stochastic is not quite confirming. It's at 81%. It should be much higher. And the on-balance volume has gone to an A, B, C, D. This is a leg E. And it's saying, I'm a little extended. Well, what are the dogs of the Dow? Those are the Dow stocks that have not participated. Normally, they're the weakest stocks, and that's why they're chosen as part of this Elements ETF. And they have been roaring. I mean, it's up 20% since we went long. So I'm watching this. I'm saying, I'm getting many clues here to say that the upside is probably going to be pretty limited at this point. So we've got to start looking to see what happens on the downside. But we have been fortunate. I spoke to you last week. I told you that we've been long the GDX for a while. From the 2120 area today to 2557, so that's a very nice gain. We've been long NG, which is Nova Gold, and that had a high today of 6.16, and we've been long from 448. What's interesting is that this has that pattern, that left side, right side price time match, and today, right there, it just broke out and it hit a trend line resistance. So I'm looking at this and I'm saying, well, we've got to be watching everything very closely because there's a rotation going on. I think that the golds have been moving because it isn't so much that the dollar's been weak. I think it's trying to look at it as more as an inflation and a kind of a hedge, a security hedge. So we're going to see what happens with the gold from here because it's been a fantastic move. I mean, something like this has gone from 3.79, almost double. That's, That's really a big percentage. So we have a mix in our portfolio, and we also have, you remember I mentioned to you that we were short Orly, which is O'Reilly Automotive. So we short from there, the most recent top that was back in December, we short from 282, just over 282, and I dropped down to 253. Now, what's really interesting about this, I had said to your subscribers, let's take off a quarter. That was last week. We took off at 261.46. And now I said today, let's take off a quarter at the opening, which was 259.36, leaving a half a position. Orly usually comes out, O'Reilly comes out with a pleasant surprise. But it seems to me from the chart pattern that we're looking at that internally something is not quite right. I think we've made a hat-trick top in the monthly chart. And that
and they're coming out right after the close of their numbers.
And they're coming out. You'll be able to watch it.
I see.
So why I speak to subscribers, let's take off our, 20 points is nothing to sneeze at, 21, 22 points. Let's hold the rest because even if it gaps up, I think that it's going to be coming down. It's going to test this trend line right here. So that's the position that we're in there. Would say a very nice gain on the short term, but I think that there's more an intermediate term short. And hopefully we're going to try to keep it as long as we can. But I'm really watching it very closely. So if there's good news, it could pop up. But then I think it starts to pull back next week or by the end of this week. And most importantly, if it gaps down, that's just going to say to me, this whole sector, and you can include AZO, which is AutoZone. Look at this horrible chart.
Well, the charts are set up for them to go down. What's intriguing, and I think we'll see this in the disclosures out here today for O'Reilly, is that if in fact that tariff comes across in Mexico, 60% of their goods come in from Mexico.
Is it as much as 60%?
Yeah. There was an article. In fact, I can pull it right out. It's intense. So that in itself will take them south. Yeah. Yes,
that's so. I didn't realize that. I realized it was going to be something. I didn't realize 60%. So they're all vulnerable then.
Yes. Yeah. Big time.
Okay. So we'll see because. But I was looking at more as that the sales of new autos is up in the 17 million area, And that's really going to affect why people don't necessarily need as many auto parts as they used to. Cars are lasting much longer now than they used to, so we'll see.
Yes.
But also, it's good to have some fundamentals as well as the technicals. So if that's the case, that's a real problem for them. The whole area, yes. And so this is I think this is going to be a fascinating week for the close on Friday, because if we do get that leg D in the S&P, that means it's going to have to be some kind of a rally. We don't have to, but if we do get it, then they're all lined up, and that means that at some point we should have a pretty healthy correction, one that, this has been a straight up move. I think some kind of breather is called for right now.
A healthy correction. The Bulls can't stand that, a healthy correction.
Yes, I know.
Folks, come over to our website at TFN. Go to newsletters, go to trading newsletters. You can test drive the opening call right now. Basil, thanks so much, man.
Thank you very much. Have a great evening.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Inside the NDX 100, let's take a look at the strength versus the weakness. So the strength inside the NDX 100 today is that you have Shira, which is a pharmaceutical drug company, that's up 2%. Netflix is up 2%. Autodesk is up 2%. And Citrix is up 1.8%. Taken away from it is Fox, that's down 1.6%. Mylan Pharmaceuticals off 1.6%. And Insight Corporation is also down 1.4%. If we go over and we take a look at the Dow Industrials, this is how the Dow is set up right now. The weakness inside the Dow is Merck. That's down 1.2%. Chevron's down 1.1%. Exxon's off 0.5%. And Pfizer's down 0.5%. The strength Boeing is up 1.3. You got Big Blue, IBM up 1.3. Apple's up 0.9%, and Walmart is up 0.8%. If we do take a look at some of the higher volume stocks, and it looks like there's going to be a low volume market out here today, you have General Motors. General Motors is down $1.73. They came out with numbers, good numbers. They sold them down. Let's see. You got Freeport McMoran's down 48 cents. Sabre Corporation. Now, Sabre is the airline reservation system, folks. That's down 10%. I'll bring that up. That's a mess. Coors, Michael Coors is also a mess. That's down 12%, $4.68. Trading at 36.61. You have, let's see, U.S. Steel, whereas U.S. Steel's down 42 cents. And let's go to Sabre first. So if we take a look at Sabre, Sabre is trading 22.05. And this thing just blew away. And if you want to see just, you know, when these equities, folks, anything's coming down on volume, just get out of the way. You know, this is, you know, this made a high October of 2015. On the weekly, made a high with 9 million shares. Comes off that high right off the bat with 17 million the next week. And then what ends up happening, and then goes from a price point of 30 down to 22, monster volume, 29 million. Does a counter trend bounce? Gets up to 29 with 11 million. Comes back down with 16 million. Now the counter trend bounce with 10 million. Comes back down with 34 million to 22 bucks. Now it's blowing away the 22.90 low. It's going to have more volume on the weekly. So then what you got to do is you got to bring this back into a monthly and say, okay, where the heck are you going? And where this is set up, folks, okay, is that it's set up to take out the swing low, the high volume swing low that it had at 22. And I suspect, you know, this thing's going to come back to 20 bucks. So it's a big number. Michael Kors, we go over and take a look at Michael Kors. What we have with Michael Kors, this is down 462. This little baby gapped away. I believe, though, this has problems too. Yeah, it has. This has been having problems for a long time. So if we pull this back, what you're going to see, same type of phenomena. You know, this thing topped out at $101 in February of 2014. Just keeps hammering lows, and this hammering right now is actually going to set up a much larger ABC down. Let me put. This is going to be a monthly ABC down. This is intense. Yeah, this very well. Well, we're at the beginning of the month. We'll have to see what the. Put it back a bit. Yeah, this is. Oh, this is pretty intense. So this is going back to right where it started off from. You're at 36. This is going back to 20 bucks, man. This is pretty insane. Okay, let me just. And that has an 8% short interest. Some of the commodities out here today. Let's go take a look at some of the commodities. You have. We're going to get oil numbers tomorrow at 10:30. Natural gas Thursday at 10:30. Natural gas right now is up 2.2%. You have wheat up 1.6%. Gold's up 0.2%. On the downside, we have cocoa down 1.9%. Yeah, if we go take a look at this gasoline, gasoline right now is trading, unleaded gas is trading at 171. And this has already, this is right into, is that the 30th? Yeah, it is. So this is pretty cool. So the unleaded gasoline, folks, you know, we're talking about oil, and I'll go to the oil contract right after this, but the unleaded gasoline is right at the highs of the OPEC meeting. That was November 30th. Gasoline went, when they came out of that meeting, it went up 12 cents. It went from 160 to 172 a gallon. We're right at the top of that. And the more that we dig into the 172.55, the higher the probability goes that you're going to go to the very beginning of that and break down to 160 and then get into the 151. If we go over and we take a look at the, this is pretty cool, because if we go over and we take a look at the actual crude oil is making its way down there. And this is where you can get a heads up that more than likely it's not only going to head down there, it's going to rip right into it. Oh, yeah, it is. This is cool, man. Okay, so check this out. You get a huge expansion in oil right now. So we've done 180,000 contracts out here today. You've hit a low of 52.45. 52.32 is the number to keep your eye on. But the way this is coming into it, you can 52.42. Oh, we're going to $48, man. $48. So this is breaking down out here. Yeah, you're coming into the swing lows. You get a huge expansion of volume. That is saying that $48 is coming at us. And $48, $47.85 is where we took off from at the beginning of the OPEC meeting. So bottom line, lower prices are coming at us. If we go to take a look at the XLE, the XLE is also confirming that the probability is much higher that that's what's going to happen. That's down 97 cents. You're breaking a swing point of 71.79. You don't have the volume on the break. Bottom line is can't hold price, though. And you're back inside the lower range. This is, okay, so check this out. This is for the oil and gas business. This is a big one because this is when it broke topside out of a consolidation, and this is a failure. This is coming back inside. You get a failure. This thing is running down to $66. The XLF, the financials are still hanging at those highs. The financials up here, they're trading at 23.54, and they can't break topside. Well, they haven't broke topside yet. They've tested these highs a few different days. The 14th, 23.83. We hit 23.76 today. You did 46 million shares. You're going into 146 million shares. So that baby needs a lot more volume to break topside. And when you do take a look at the bond market, how the bonds are trading, that's saying that it actually wants lower price. Let's go to our man Marty in Worcester. Hey, Marty, what's going on?
Oh, not a lot. I'm just curious about something. But first, how have you been?
I've been good. Yourself?
Getting by, getting old.
You're not getting old. You would tell, I met you now, oh my God, I think I almost met you 10 years ago, huh?
Yeah, I know. I'm
How cool is that?
Anyway.
You were telling me you were getting old then.
I was.
See? You got younger listening to all the Tigers and Tigresses, didn't you?
I might have felt a little younger some days, but I didn't get any younger.
Yes, you did. It's a head game. I'm telling you, folks, it's a head game. It's absolutely a head game. And I don't know how it works, man, but it's a head game. It's just, start counting backwards, man. I'm telling you. I started counting backwards. I swear to God, folks, I started counting backwards when I hit 60. So now I'm only 55 or 54 or something.
Like Jack Benny.
Stay right there.
All right.
We're coming right back. Dow Industrials right now up 25. NASDAQ's up 5. S&P's are flat. We're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. The Dow right now is up 28. You get the NASDAQ up 6. S&Ps are up 1, and this market is having a hard time holding on to price, folks. Doesn't look like it's going to happen as we come into the close. We're talking with our man Marty, and we're going to be talking about VNR, right?
Yes. I mean, I've never seen, well, I might have seen it, but this time I'm kind of interested, maybe. You know, a small flyer on it. I don't know.
Okay.
It just went Chapter 11. It used to be a $30 stock with a huge dividend. Just went down a bankruptcy in Chapter 11, and it's today up 40%. First bounce. And I was wondering, I mean, I think there's going to be a little bit of a pullback, it's looking like to me, but do you buy this pullback or do you stay the heck away from it?
Okay, I just want to make sure I get the right stock. So it's Vanguard Natural Resources, right? It's the
yes, sir.
Okay, so it's 27 cents. So the low is 17 cents. The high is 262. Now, what this equity does, folks, is that it's an independent natural gas and oil company. The company develops and exploits mature, long-lived natural gas and oil properties. What that specifically means, folks, is that these, when you see develops and exploits mature, that means that both the gas and the oil properties have already taken the best gas and oil out of that property, and they're looking to get the slivers that are left over.
They buy dry wells and try to eke a few drops out.
You got it.
Oh, boy. Well, so it's something to stay away from, even for a little flyer, then.
It is. It is.
All right.
Yeah, it definitely is.
Thank you.
Not today, Marty. Not that one. You know?
All right.
Okay,
There'll
brother.
be one.
Listen, man, you have a great one, a safe one. Appreciate it.
You too. I do too. Thank you.
Okay, man. Take care.
Bye-bye.
Let's go over to that NASDAQ and look at the composite for a second, because it's going to be, if in fact, folks, this composite fails also, this, I would say, oh, it's so close too. We're at 5670. And 5669.611 is the number. You know, if the composite fails and the Dow fails, folks, with the bonds going up and the dollar can't hold price, that to me would be that we actually may get a downdraft here. You know, we've had a market right now that's gone sideways, I think, since December 14th, right? So, yeah, December 12th. You can make the case December 8th to, yeah, the 11th. That would be a big indication. Because what we also have here is this. So picture what we have. This is a good timing for this. Window dressing is over. We get option expiration, I think. Let's see. What calendar-wise? Where's my calendar? The option expiration, folks, is always the third Friday. Yeah, you get till the 17th. This would be a nice time to get a downdraft going. That's how this thing is set up right now. So we're going to know in another 20 minutes. That's pretty cool.
Volume-wise, the volume is anemic, so you have two different things. It would mean that yesterday we had volume anemic swinging into the highs. Today, if in fact you get a failure, with price and volume with dramatically lighter volume. And one of the biggest, I would say, pieces of information are the notes and bonds, though. The notes and bonds, to me, are the kind of the biggest information. And it's not that it's the canary in the coal mine, because it's not that direct. But what you do have is that you're going against the swing of 125.13 on the 10. You take that out, that's going to bring us up to 127. And if we take a look at the 30, and I put this on a continuous contract, what you're going to see is that you're already in a zone that can bring you to 158.28. You know, because the 30 had never broken a major swing point and still hasn't. You know, and now it's not that you're that far away from it. You're only like 5 points away from it. But bottom line is that at this particular point, this thing is building cause to get up to that 158, 159 area. And if that's what we get, that differential inside all these markets would be saying that you got a downdraft happening out there. People are just going to want to get their money back. They're going to go into bonds once again. And that's just kind of how it shakes out. The catalyst out of here, who knows what the catalyst is going to be. I think it's just going to be selling. I think when you lay at a high for so long and you can't break it, you know, each and every day, you know, when you're long, it's like, okay, hold it. Are we going higher? You know, it's been an extraordinary run. Bottom line is that's when people start taking their money and say, okay, I'm going to take my ball, I'm going to go home for a bit, and then see how this thing shakes out. You know, so we'll see how that whole thing does come down. If you go over to the Dow, looks to me like it's going to be the first one that is going to give it up. And we have plenty of numbers coming out that could take that down pretty quickly. The NDX stocks, the larger NDX stocks, you know, have already done their deal. So it's like, okay, what's going to bring the Qs higher? Now, there's no doubt out here today we had that spike high, and the spike high was brought to you by you know, Netflix, Autodesk, and Cognizant Technology. You know, NFLX. Let's go look at Netflix for a second. So Netflix is trading 143.86. I see. Oh, cool. Okay, so Netflix is testing its high from when it came out with its numbers. It came out with its numbers on the 19th of January, 143.46. Yeah, that's still pretty good up there. We go over to Amazon. We take a look at Amazon. Amazon's trading. Amazon looks like it's doing a small ABC down. So that baby wants to go lower. Google, ABC down. That's pretty cool. Okay. Intel. Intel still could go higher. Microsoft. Microsoft could go higher too. You know, the yin and the yang is out here in a big way, though. There's no two ways about that. Oh, let's go take a look at General Motors. So General Motors come out with numbers, good numbers, but bottom line, you're down with volume. In fact, it's an ABC down. Took a B point out with volume. So your A point on this is 38.37. Your B is just a 3-pointer, which gets you 33.86, which is going to bring you, well, this is a trip, going to bring you right back to the November 11th. You know, November 9th, this GM was at $30. By the 11th, it's 34, runs all the way up to 38. And that's going to be, I believe you're going to see a failure. Oh, that was just going to the top of the range. That was going to the top of the range, and it's going to come all the way back to where it started off from. And that's going to be the key, folks, inside the dollar index, too. That's what it looks like to me, that where the dollar index had taken off from, that is, in fact, where it looks like it wants to come back and trade back into. That number is the 95 number. You know, the ABC structure on the way down happens to be the 96 and 965 area. That being said, though, how this took off from 95, it looks like that's what's going to be printed out here. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 26. You get the NASDAQ up 6. S&Ps are flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials right now up 19. You get the NASDAQ up 5. And you are going to be looking at a failure out here, folks. This is pretty wild, man. I'm telling you, you got to love markets. They're just amazing. Between highs and lows in markets and the testing. That's all markets do on a continual basis. And, you know, when you're basically speculating as to where things are going to go, the harmony that is inside markets, which you don't get a lot, by the way, that is what you really want to pay attention to. And we'll see whether we get that out here today. And that harmony would be that you have the Dow failing, you have the NASDAQ failing. As I said a little bit earlier, it's bonds going topside, though, that probably give you the best indication that, bottom line, this market wants lower price. And then on top of that, the good old King Dollar. King Dollar was probably the first one out there. And, you know, to me, all you have to do is actually put that together with the amount of chaos that is thrown. And I'm not just talking, I'm talking about inside the business community. It's huge. And I'm sure that there's plenty of business folks out there that thought it was going to be fabulous and that regulations were going to go down. What they weren't thinking is that they had a new dictator in town. And guess what? The first few weeks they bowed down. Now we're going to see where this is going to shake out, because it is a black and white deal, man. I mean, in a huge way too. It's not a small way. And you'll see they're going to have to keep, the large companies are going to have to keep someone else to be the mouthpiece for a certain amount of time. And then you'll see the wraps come off, because we'll see it. I suspect the numbers in GM this morning, the numbers we'll find, it's like, okay, why are you selling off? We'll see a little more of it. We may see it even in O'Reilly Automotive when they're coming out after the close with their numbers. The way O'Reilly is trading right now, it looks like it actually wants to bounce up a little bit, meaning to the 269. But I think what they're going to have to do is they're going to have to disclose as a material aspect the amount of material that they actually take in from Mexico, and it's 60%. That's a big number. If in fact there's going to end up being a border tax on that, so there's going to be those types of deals that larger money is going to get involved all over the place here. The volume, let's go take a look at where the volume stands. So the volume right now, you have 592 million on the NYSE. So you're going to have short volume on the NYSE. We take a look at the NASDAQ composite. We get 1.7 billion. Now, they just poured some volume into that, that's for sure. I believe, let me see what we're going into again. Oh, look at the composites, 2 points over. This is going to be wild. So we're going into the 26th. 26th. I might get it. 1.831. That's what we're dealing with. 1.831. We're at 1.722. They can put another 100 million in there before the close. So bottom line, we'll see if in fact that little baby wants to get down in there. And as we get into that close, they're going to, well, we'll find out how this shakes out. If we go take a look at the SPY, the small caps are done. The small caps, what the small caps have done, the small caps once again are showing that they want to go lower. They had an expansion of volume. It's just subtle out here, but bottom line, you got an expansion of volume. You're down 63 cents. This wants to run to the bottom of the range out here, which is 133.17. And what we are going to get, we're going to get some real movement after the close out here, because you get a lot of stocks that can move the market for the next 15 minutes as the futures are still open. Dow Industrials right now up 32. You get the NASDAQ up 8. S&Ps are up $1. You stay right there, folks. We're going to be coming back with some numbers for you after the close.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love coming out of you makes you happy. The whole world can love you, but that is not the love that'll make you happy. What will make you happy is to share all the love you have inside of you. That is the love that will make the difference. Market-wise, let's take a look at it out here. We had the Dow Industrials up 37, NASDAQ up 10, S&P's up 1.5, gold contract up $2.70, trading at $1,234 an ounce. Silver up 17 cents at $17.71 an ounce. Platinum down $9, $1,005 an ounce. Copper down $0.015 at $2.63 a pound. Light sweet crude off 78 cents, trading at $52.23 a barrel. Bottom line, oil, folks, oil is in the lower range now. You're going to see that thing try to get into the $50 level. You're just about at the top of the OPEC meeting on the November 30th time frame. Bonds, the 10-year note up 3 ticks, 125.01. 30-year bond up 16 ticks, 152.01. Both the notes and the bonds, folks, went topside, had expansion of volume. They're pushing into their swing points with some decent volume. I expect you're going to see them go after these swings, and more than likely today, let's see, today's Tuesday, yeah, I'd say tomorrow or the next day. Friday is a tough one to get anything accomplished, but I expect tomorrow or the next day you're going to go after them. King dollar. King dollar up 485 ticks at 100.350. King dollar just can't handle higher price, folks. Each and every time King dollar goes topside, what ends up happening, gets sold down pretty quickly. King dollar is an ABC structure on the way down, confirmed ABC. What that means is that it took out a B point, took it out with volume. Your price projection is 96.965. Euro, the euro is trading at 106, and the yen is out here at 112.36. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We are at 228.96. Your high up here is 228.71. Bottom line, you're over the high. That means you can go higher. You know, bottom, this little baby, no, we're not over the high. So 229.65. We're at 228.96. More than likely, this is still going to try to tag that 229.71. That's how it's kind of set up. Dow Industrial is now a different ballgame. Dow failed on price, failed on volume. So the Dow's saying it wants a pullback. Dow Industrials today got up to a price point of 20,155. Got over the high that was generated out here on the 26th, which is 20,125. You close at 20,090. Bottom line, that's saying that, you know, we're going to have plenty of numbers coming out here. The yin and the yang will be out here, but that's saying that the Dow is going to basically try to go downtown. We'll see whether they get an expansion of volume as it moves into lower price. Gold contract. What do we have with gold? Bottom line is that they can't drive it lower, folks, okay? This gold contract wants higher price. So it's been quite a run. There's no two ways about that. You know, December 15th, gold was at 1127. You're 1234 right now. Nothing huge, but decent run. Has the volume behind the move. We've done 193,000 contracts out here today. You're eating into the November 11th bar. The bottom of that bar is 1225. The top's 1269. Where I suspect gold is actually going to run to, though, is 1315. That's how it seems to be set up right now. Silver is the same type of setup. And what you have with silver, silver, it just matters when the thing wants to take off. Little psycho, yeah, no doubt about it. The silver market is. That being said, though, guess what? You are coming into the supply line, and you're coming in with volume. That's the bottom line. You're coming in with some real volume. 54,000 contracts out here today. The low of the November 11th is 1726. Bottom line, you're at 1771. That's saying, guess what? Game is up here to $19.12. We go take a look at the notes. Notes and bonds are saying quite a bit. The note market out here today, we did 1.35 million contracts. You are trading at a price point, you're right under the swing low. So the swing low in the 10 years, 125.13. We hit 125.10 today. You are at 125.01. It looks to me like next couple of days we're going to go after it, and we'll find out whether it can take out that swing with volume, not volume, all of the above. It looks to me like the 10-year wants to run up to the 127 area. 30-year bond, same type of setup inside the 30-year. 30-year right now is trading 152.01. And that little baby looks to me like it wants to run up to the 155. King dollar still has a hard time holding price. That's the bottom line. Got to a price point of 100.695 today. You're at 100.360. You've done 38,000 contracts, and that 38,000 is coming into, I believe it's like 64,000. 57,000. Bottom line, can't handle it. After the close, you had Gilead just come out with numbers. Gilead closed at Gilead closed at $73. That's trading at $70.12. Buffalo Wild Wings come out. Buffalo Wild Wings, where is she? Buffalo Wild Wings closed at $149. That's trading $142. Let's see, let's see if Panera come out yet. Panera closed at $214. That's trading at $219. ORLY. Let's see if Orly come out yet. Orly closed at $262. That's trading at $260. Bottom line, that hasn't come out yet. Future-wise, let's see. Who else is going to be BWL? Let's go BWLD. We'll go back to Buffalo Wild Wings for a second. Okay, so that's trading down $7. And that's going to, go, hey, Buffalo Wild Wings, pretty simple. Well, not simple, wrong word. Buffalo Wild Wings, high volume, swing low. 133 is screaming. And let me pull this back, put this on a weekly for a second. Yeah, my God. Yeah. Actually, I can make the case. Buffalo Wild Wings make the case going to 122. That's pretty intense. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 37. NASDAQ was up 10. S&Ps were up $1.50. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow Industrials finished up 37. S&P's up 10. S&P's up 2. NASDAQ up 10. Now let's go over to our man, Mr. Andy Hecht, as we do every Tuesday and Thursday. And don't forget, folks, Andy's got a great show right here at TFNN, 5 to 6 Eastern Standard Time every Tuesday and Thursday. He also has a great newsletter. It's the Technomento Commodity Report. The way that you can test drive this 30 days absolutely free is come over to our website at TFNN. You go to newsletters, you go to trading newsletters, you can test drive the Technomento Commodity Report 30 days absolutely free. Andy Hecht, what's going on?
Hey, Tom, how are you?
I'm doing good, man. It's getting a little warmer out there.
Congratulations on your Super Bowl victory.
Oh, man, what a trip, huh? Was that
what
wild?
A game.
That was,
what a crazy game.
That was absolutely phenomenal, man. That was like over the top. No doubt.
Crazy.
No doubt.
What a crazy.
How about that Edelman catch, right? I mean,
that was unbelievable. Yeah, that was payback for 2 giant catches.
It was on the head. I know, man. That's exactly what
By the way, I will tell you, I was happy. I had one reason I was happy the Patriots won, because I want my team to be the only team that beat them twice in the Super Bowl.
That's good. Okay.
Yeah.
That's good. Everyone's got all those different reasons. I know,
Everyone's
man.
got a reason. Everyone's got a reason.
I had said to Tommy, folks, okay, when we were watching it, it was pretty wild. I was 2 for 2 the day of the game. You know, I'm out and just getting some errands or something and, you know, talking to people. Like, what do you think? Go Pats. They're looking at me like, well, go Pats. Are you crazy, man?
Well, you're in the South. Come on. Although there's Patriots fans everywhere.
Yeah. Anyway, so it was great, though, man.
There were mostly Patriot fans where I watched it, no question. I think it was a very interesting
all the gamblers
game.
are in Vegas, right? They're all from Boston, exactly, right?
Yeah. Oh, they were all. That was it. I mean, I thought that it would be a higher scoring game. But it was a crazy game. Yeah. Really, I mean, a great game. Great game. I'm glad. Usually the Super Bowls are not good games. This was a good game. No question.
So
markets. Meanwhile,
where we start?
Markets. All right, let's start with lumber.
Okay.
Lumber, man, $362 per 1,000 board feet.
Look at that.
Highest price since let's see. Let's go all the way back here to like 2014. You know, there's a lot of reasons. Interest rates are low. New home construction continues. People are going to start buying new homes now, probably an accelerated pace, because there is a feeling that they will head higher eventually.
Yeah, I better stop buying more trusses. It's interesting. The trusses haven't gone up yet, but that's quite an acceleration. Yeah, 225. Wow, man. Okay.
Yeah. They're going to go up. There's no question. Store them. Get some storage room and corner the market. Anyway, also the prospects for infrastructure building. Listen, if we rebuild infrastructure here, if we do it, lumber is a key raw material.
Yeah.
So,
there's no doubt.
Bottom line, lumber looks good, and that is an economic indicator. Really looks strong. As far as the precious metals go, I love the action in silver. Gold, to me, still has to get over 1240, but it looks like it's going to do it. These things are taking the stairs up. That's the one thing I will say about gold and silver here. They have been taking the stairs up. We haven't had any big spikes, really.
Right.
Haven't had a $30 move in gold lately. Maybe it's coming.
Now, to you, taking the stairs up, is that good or bad?
Well, that's good, actually.
Is it? Okay.
But they do, as you know, they take the stairs up and the elevator down. That's just the way these things tend to trade.
That's markets. I was just curious because there's no doubt, folks, okay, it's been hard staying long this trade because of that.
Yes,
that's the bottom line.
There's been no real rallies to sell into. It's just been a kind of a grind.
Yeah, it is, exactly.
And actually that's actually good, but it is hard. It's shaking a lot of people out along the way on dips, intraday dips. I think the silver move has been kind of easier to play than the gold move. The gold move is tough because you had that big decline in open interest, and now you have a slow, gradual rise. I think that was good for gold. It washed out a lot of weak length out of the market. So we'll have to wait and see what happens. But they both look good. I'd like to see gold above 1240, and maybe we'll get that kind of little bit of a whoosh if we do break above 1240 here.
Yeah.
I think oil's interesting.
Yeah.
And spoke a little bit about it. Look, oil is looking a little heavy here.
Yeah.
And it's possible we'll go down to $50 a barrel, maybe take a quick look below there. But I still think that the deteriorating relationship between Iran, the U.S., that's got to put a floor under the price of oil because they're crazy in Iran. There's no question about it.
Let's see. So today's the 7th. So what's going to happen on the 10th, folks, is that so the Ayatollah came out today, and he says that he's going to give Trump an answer because the 10th is the anniversary of the revolution.
Oh, God bless.
Yeah. So the people, so bottom line, don't go short oil right now, folks. I think it's going lower also. Okay, but to the bottom.
No, it looks that way, and all indications are that way, and inventories are building, and products are cheap, and all of the reasons for it to come off. The inventories are building every week, and they'll probably get another build this week. But hey. You know as well as I do. They blow up a pipeline in the Middle East. They do something in the Gulf. They do something with a warship. We wake up, it's $10, $15 higher. One of the things I've been looking at is, one of the metrics that I like, I was an options trader for many years. I was an options market maker. So I watch volatility. It's one of my most important. Let me just highlight.
Right, because if you're either buying or selling premium, right, no doubt.
That's it. It's all volatility. And if you take a look here on my chart, my daily crude oil chart, look at what volatility has done. It's gone from like 55% back in December around the OPEC meeting. We're below 20%. And that tells me one thing. Options have gotten cheap again.
Right.
So I was looking at like the $65 calls out in June in crude oil, and they're like 33 cents. And you know what? I tell you, I don't mind throwing a little bit of money away on that. And I've been writing an article today about airline stocks because, Buffett got crazy. He went into airline stocks after for years saying that, if you want to become a millionaire from a billionaire, buy an airline. He's got so many quotes. But he went whole hog into United Airlines, into Delta, Southwest, and American.
Right.
And I was saying to myself, if I'm holding that position and I'm having profits in these stocks, I want to buy some oil calls against that position here, because the one thing that two things can destroy airline stocks. Well, one is a horrible terrorist event somewhere in Europe or something, which will curtail travel. The other thing is if the price of oil jumps, because then jet fuel goes up, and that's the key input into the price of airline tickets. So, I was looking at those call options, and 33 cents for a $65 call out in oil, out to June. Hey, that seems real cheap to me right now. Granted, it's $13 above the market, no question. Well, the June crude is it's $11 above the market.
That's not that much. That's not that much.
It's not a high premium. Right. And by the way, it's crazy. It's crazy world insurance, and we live in a crazy world.
It's getting a little crazier each day, yeah. I could.
No. I'm just saying. I'm saying that I am concerned about this Iranian rhetoric and U.S. rhetoric going back and forth, and that might be a good way, to.
I think it is. No, I think that's a good trade. You stay right there, all right? Andy and I are coming right back, folks. Our phone number is 877-927-6648. Come over to our website. You can test drive Andy's newsletter right now. Go to newsletters. Go to trading newsletters. Test drive the Technomental Commodity Report. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So talking about our man, Mr. Andy Hecht. We're just going to go through a few numbers right now. Disney just came out with numbers, folks. That closed at 109. It's trading 107. Gilead just come out with numbers. That closed at 73. That's trading 70. Let's see. ZG Zillow just come out with numbers. That closed at 37. That's trading 37. BWLD, Buffalo Wild Wings, that closed at 149. That's trading 149. Oh, this is going to be interesting because that was trading 142, went back to 149. Disney's the big one out there. Disney, bottom line. Sorry, folks. Excuse me.
Pablo.
I know. Oh, my God. Disney, is basically bottom line, losing, ESPN subscribers, which is a huge problem. That's
a huge issue. But you know what? I think that if their CEO signs up for a couple more years, the stock will rally on the back of that because the market likes him.
Yeah, and he's going to. He ain't going to let it go.
Absolutely. I think his contract's up in 2018.
Yeah.
But he's already been saying, and the market loves this guy. I think he's got a lot of things in Asia that he wants to see through. Yeah. And he's not an old. He's a young guy.
He's not. He should be. Right. He should stay. There's no doubt.
Yeah. And the market, like I said, the market loves this guy. They really do. So let's take a look at natural gas. By the way, our earnings are almost over, aren't they? This is like the last week.
Not really. No. This is the avalanche right now.
Oh, this is the avalanche right now, and then it'll quiet down a little bit. Yeah. Then we'll see what the stock market's made of.
Yeah. Seriously.
Then we'll see what this stock market's made of. I think it's going to be interesting, man. It's going to be volatile. That's for sure.
It's there.
It's building cause to move, I think. Just feels that way. Natural gas, Tom?
Yeah.
Surprised me. We got down to $3 yesterday. I thought we'd see a two-handle, but we bounced out of there. Now, the market's expecting 155 billion cubic foot draw.
Okay.
This Thursday, which is big. I mean, it's about double what we got last week. And it was kind of warm. But cold weather is coming back a little bit. But we are running out of weeks here. So
I know, man.
I still think, look, we're trading in the bottom end of the range. We've been making lower highs. I think, you got to be really careful in natural gas. Just remember what happened last February. It was like, carnage. I don't know if we'll have the same carnage this year because we are below last year's levels in inventory and we should drop from here. But still, filling that gap on the charts, that is going to be a major undertaking here to get this price up towards the, 360, 370 level.
I'd love to see it get up there before Thursday morning. It's Thursday at 10:30 that it comes, folks. Okay.
Yeah. I don't think that's going to happen. Maybe it'll get up there before. After. I never discount any possibility in natural gas, but I do think that before the winter season's over, we will see a two-handle on this thing at some point. I don't think it's going down to $2, but I think $2.90, something like that. I think we're going to have to take a look there, certainly. Based on the fact that we're running out of weeks here.
Yeah, there's no doubt, man.
Since we're running out of weeks in natural gas, we are running into planting season in the grains.
Okay.
And let me put a chart up here, something a little interesting to talk about for a moment, which is the soybean corn new crop ratio. Which is trading at about, let's see, we can see if we get it there. There it is, about 2.57 bushels of corn value in each bushel of soybean value.
Okay.
And over the last 40 years, the average has been at about 2.5 to 1.
Oh, so we're above. That's close, though. That's not.
It's close.
Okay,
it's close. But it is favoring soybeans here, which is why you're getting a little bit of a bid in the corn market.
Okay.
And the other thing that's helping corn here, Tom, is that even though gasoline is dropping, we are seeing a little bounce in the ethanol price here. Look at that. You see that chart?
Yeah.
The ethanol price rallied from about $1.45 up to about $1.56 or so, 57 a gallon, and that's supportive of corn. So, we are seeing some action, and if you just look at a corn chart, I kind of like the pattern of higher lows going into planting season this year. Look, we have huge inventories, but we do have record demand. And what we're seeing in all the grains, whether it's corn or I'll put the bean chart in it looks very similar, or even lately the wheat chart, we are seeing some constructive price action, and that is based on the demand rather than the big supplies. The market is now focusing on, hey, we have this record demand every month, and if something goes wrong, or we have a drought, or we have something, wow, the upside could be tremendous. That's why I favor this market, this grain sector. And I think that, downside's limited, upside is always potentially explosive, particularly at the current price levels, particularly after 4 straight years of down moves. So
it's hard to believe it's been down 4 years. Wow.
4 years in a row. 2012 is the year we had that big drought, right?
Yeah.
So we're also getting some strength in the meats, particularly in the in the hog market. Hogs really, they've really come a long way. I mean, they put up a new high today. And the cattle, which were correcting from 120, they kind of seem to have found the bottom and have come back a little bit. So, the agricultural commodities are all, the cattle and the hogs are always concerned about what feed prices are going to be. So they're looking at the grains too.
That's pretty amazing. So the hogs
right?
just went from 55 to 72 cents a pound. Right. That's percentage-wise, that's huge, right?
Yeah. Oh, it's ridiculous. Actually, the nearby contract went from 40.7 cents.
Wow.
That's a mind blower, right? From 40.7 cents on the active month contract, we've gone to 72 cents. I mean, that's a monster. Since October.
Totally. So a couple of tigers want to know where we are with wheat.
Where are we with wheat? Well, wheat is very interesting. So we have the lowest plantings since 1909 of winter wheat in the U.S.
Really? And why is that?
Because the price is so low and inventories are so high.
Okay.
19% higher on a year-on-year basis.
Wow.
We also are getting some indications that there might be some cutbacks in black sea wheat coming out of Russia and the Ukraine next year. But, there's been a lot of investment by companies. Black Sea, in Odessa, that area, the wheat that comes out of Russia and the Ukraine that travels from the port of Odessa in the Black Sea.
I thought you said black seaweed.
Oh, no. Black seaweed, that's for my sushi.
No, I got it. The Black Sea, that's because a lot of wheat comes out of there, too. I got it. Okay, right.
Must be my Brooklyn accent,
It
right?
is. It definitely is. Come on.
I got Brooklyn versus Boston here.
I know. It's a good thing.
Anyway, so the point being that classic economics is starting to kick in wheat. We might not get a price explosion right away, but this does make the downside more limited if we are having some, cutbacks in production.
Yeah, right.
And certainly, some of the soil, I was talking to John in Philly, who was telling me that the chart is starting to look a lot like it did in 2004, 2005, which kind of led up to the soil dried out. It led up to the big explosion. I don't know if you remember, in 2008, wheat went to $13 a bushel, above $13 a bushel. So, we could be sowing the seeds here for some very interesting, times in wheat in the months and years ahead. And always remember, oil is probably people would say is the most political commodity, but wheat, man, that's the key ingredient, bread. And when it comes to politics, wheat is the king.
Wheat is the king. So you stay right here, folks. 5 o'clock to 6 o'clock. Andy's going to be coming right up. Andy, thank you so much. We look forward to the show.
Thanks, Tom.
Thank you. Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Coming right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at Sears. Now, this is pretty intense, folks. So, Sears today is down 86 cents. $5.66. What you're going to see here is just remarkable, actually. I mean, this is an equity that was worth $117 in 07. But the way that this is a, you know, you hear me talk about confirmed ABC structures on the way down, on the way up, and all of the above. This is a confirmed ABC structure on the way down to go out of business. Now, the thing that's so intriguing about this, when I just look at it, it's like, if in fact that happens, the amount of money that Eddie Lambert's going to lose is just amazing. So what you had out here today, let's just see what this is said. Okay, so Sears Company tumbled the most in 3 years as concerns about its cash burn and dwindling options continued to weigh on the department store chain. The stock dropped 13%. Sears' view of the chain darkened after Moody's investor cut the credit rating. To stay afloat, Sears has turned to asset sales and loans from its chief executive officer and largest investor, Eddie Lambert, as part of a comeback bid by the Hoffman Estates company. It agreed to sell Craftsman tool company Stanley Black & Decker for $900 million. It's also going to close 150 stores. Bottom line is that this is going to be just wild watching this whole thing shake out and see what ends up happening. You know, if in fact, let me just see something. I want to see what the. So he's been trying to resurrect this thing forever, and he just keeps doubling down, doubling down, doubling down. Okay, but here, now check this out. Okay. So, here, I'll give you a scenario. Oh, man, this is going to be a trip if this shakes out. Okay, so picture what you have here, folks. You have Eddie Lambert owns 29% of Sears. Now, yeah, this is how this is going to shake out. He keeps lending it money, but I expect what you're going to have here is that he probably lent it enough money at this point that if he does BK it, which he'll end up doing, he'll own the whole thing. And maybe he will come out all right because he can see what's going on here. If, in fact, he ends 30% of it, does the BK, the other 60%, other 70% gets wiped out. He'll have a fight though. This is what's interesting here is that you have two other hedge funds that are in here too, which is Fairlawn Capital and RBS Partners. So Fairlawn Capital, wow. Hey, we'll see where it shakes out. It's gonna be a problem though. That looks like a big problem child. Let's go over and see if O'Reilly Automotive come out with numbers yet. O'Reilly closed at 262. It's trading 262. Okay, so they come out with numbers there. The estimate was $2.54. They made $2.59. That's the bottom line. Let's see. Right now, 262. Yeah, it's trading 262. Right where it's at. Let's go to Disney. So Disney's having a problem child here. Disney closed at 109. It's trading 107. Let's see what they have to say. Okay, Walt Disney struggles with ESPN. Took center stage Tuesday as the entertainment giant blamed falling viewership and advertising for slower growth. They're blaming ESPN. That's going to be a problem because ESPN was their whole growth deal, folks. What everyone had always figured is that with sports, you got to watch it live, and guess what? You have to watch sports live, but you don't have to watch ESPN all day long. You just hit your phone for 2 seconds and get your scores. Revenue shrank 3% to $14.8 billion in the first quarter, ended December 31st. That missed the $15.3 billion, which was estimated. So that's quite a miss. That's a $500 million miss. The decline in profit ESPN, which has fewer college bowl games and lower viewerships, dragged down the results in cable TV. So bottom line is that they have problems. 109, it's trading 107, and this is right after it actually just had a huge run. Also, this thing took off from $90 up to 110. You're going to be at 107. Yeah, this thing can pull back to like 98. Gilead, okay, so this is a stock that's been having a problem for quite a while. Gilead closed at $73. That's trading $69.90 right now. This is going to break out a low, yeah. So Gilead, we take a look at Gilead. Gilead had been trading $123 in 015. Oh, look at this. This is going to be intense. This could be another ABC down. 1 second, let me pull this back. Yep. It's going to be, so $63 is wide open anyway. Excuse me, folks. Sorry about that. Yeah, $63 is wide open. That's where this thing wants to go to. And if you don't hold $63 in Gilead, you're going to go to $26, $28. That's what it took off from $28 in March of 2012. Went from $28 up to $123. Now you're back to $73. Pretty intense. Panera, P-N-R-A. Let's see what we got with Panera. Panera closed at $2.14. That's trading $2.19. So that's trading right at its highs. The estimate was $2. They made $2.05. Their comp sales were up 0.7%. Now, that's less than it was estimated. They thought they'd get a full 2%. Their revenue was $727 million. That was it's actually a little shot in revenue. The estimate was $727.7 million. They took in $727.1. BWLD, good old Buffalo Wild Wings. That closed at $149. That's trading at $143. And that's going to go after, that has a high volume swing low at $135. So total revenue was $494 million. Company-owned restaurants increased sales by 0.9%. Same-store sales decreased by 4%. Yeah, that's a big number, man. I don't know what's so great about Buffalo Wild Wings. I don't like the place myself, but I know there's plenty of people that go there. It's just that there's so many better chicken wings out there. Total revenue increased 9.6%. This is for the full year to $2 billion. Company-owned stores. See, year over year, still same source sales decreased instead of increased. Let's go take a look at, let's see. Oh, Zillow, ZD. Let's see. No, ZG. Zillow closed at 37.17. That's trading 35.15. And let's see. Revenue was $227 million. That was increased by 34% year over year. You stay right there, folks. We'll be coming right back. Dow Industrials failed on price, failed on volume, folks. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. So we take a look at Zillow. So numbers on Zillow go like this. The estimate was 11 cents. They made 14. That's the bottom line. Top line, the estimate, actually for the first quarter estimate, the estimate was $236 million. That looks like it's going to be, well, it's going to be close. They're looking at 232 to 237. Their fourth quarter revenue, the estimate was $222 million. They made 227. So bottom line is that they did make the bottom line and the top line. It's still selling down $1.50, which, yeah, it's not the end of the world. This thing already, I believe, got kind of hit. Yeah, it's the high-end consolidation. Yeah. This is interesting. So this actually has a high volume swing high. This is building costs to get into 38. It's going to need more volume. It actually, it's going to definitely need more volume, but that has a high volume high. Let's see. TWT, Panero, or let's see if Orly come out yet. Oh yeah, so Orly did come out, but still, it's trading right where it was at. That little baby. So sales in the fourth quarter increased 150 million or 8% to 2.10 billion. Man, that's amazing. Imagine 90 days, folks, 2.10 billion in sales. It's a big number. Gross profit for the fourth quarter increased to 1.11 billion. So just look at this. Man, there's big money in selling auto parts, folks. So gross profit, they took in 2.15 billion. Their gross profit is 53.1% of sales. That is amazing. That is absolutely amazing. And that is up from last year. Last year they did, their spread was 52.7%. That is one number, man. Holy cow. Well, that's always good to know. We're buying anything. You're talking about big numbers, no doubt about it. Now, it's going to be intriguing inside of here, but they definitely can, basically take a tariff tax. Would end up buying that, paying for that tariff tax. But the way that Orly is set up, folks, is that it has a high volume swing low at 251, and I expect you're going to go after that. If we actually take this back, this equity went straight up from $26 in 2008 up to $292. So you're talking about a 10-bagger for, an auto parts store. And if we do go over to that oil market, the oil inventory, the API number, bottom line, was a huge build. Our man, Mr. Andy Hecht, right now is in the den, 14.227 million barrels. So that, no doubt, is a big build. And let's see, that's SCO. Let me just make sure I got the right one. SCO, twice the inverse correlation. Yeah, so bottom line is that they're bidding oil down right now. And, looking at that XLE, the bottom line is that the XLE wants lower price also. And that, folks, is without the amount of oil that's going to be coming, online. We'll see, let's see, right now, just look at something for a second. So I was going to say that water is going to be more expensive than oil, but actually when you look at gasoline right now, sometimes it's pretty close right now. So the gasoline market, unleaded, is at 171. So bottom line, oil's coming down. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Go for a blast with it. Yesterday's gone. Tomorrow's not here. What are you doing right now, baby? Go have some fun. Stay right there. Andy Hecht's coming right up, folks. Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.